Good morning, everybody. Thank you for joining us today for this presentation. Very happy to take you through some of our results and, of course, take any questions that you may have a little bit later on in the process. I'll give you a business update, a regional update, and a look at our strategy, and then David will take you through the financials ahead of those questions. If I could have the next slide, please. This represents the current layout of Driver World with our offices over on the left-hand side in the US, right across through UK, Middle East, and Asia Pacific. The new dots on the map that are particularly strategic for us are our relationship in Africa, which is a joint venture that allows us to be in that market without exposure to cost risk. Also in South Korea, the opportunity to work for and engage with some of our largest clients, both in the Middle East and APAC. And over in the Middle East, the outlet that we have in Saudi Arabia, in Riyadh. These are the areas that are pulling in the most work. Last year, of course, we put in place Madrid and New York, which allowed us to access the markets in South America, which we've been doing. So this is the current picture of our world. 31 offices and 50 experts across 289 staff. Next slide, please. We still have 3 brands that we're trading as. Dialis is our expert witness brand. Those of you that have joined these presentations before will know that that focuses on litigation, arbitration, and the like, and providing world-class experts to those various forums. The Driver Track brand, in which most of our staff work, is claims and commercial strategic management of projects, often major projects, including forensic delay analysis and dispute avoidance as well. We also do some training. For our Driver Project Services are staff that work on live projects, and that is currently something that we do from the UK. We have in the past carried out these type of services in different parts of the world. Outside of the UK, it's only Oman that we currently still have a presence in project management and quantity surveying in. That's something that is very much focused on the northeast of England, where we have a very stable and growing business in that sector. Next slide. So a couple of key headlines. Whilst we have seen in this particular year that we're talking about, the year ended September 21, a fair bit of COVID-19 impact on economic activity in different areas across the world, particularly the Middle East. As you'll see in the numbers, we have seen a fairly strong performance in managing that and an underlying profit for the year of £2 million. Cash was healthy and positive at 6.5 million at the end of the year. Our Europe and Americas business had both an increase in profit and revenue as the pandemic was managed perhaps in a slightly different way and had different effects in Europe and Americas to those in the Middle East. Our Middle Eastern market slowed down quite a lot, and although it's restarted now, the effects of that have gone to both revenue and profit, with a chunk missing from both of those. We've taken the opportunity to restructure those businesses, which I'll go through in a separate slide in a moment. We had a post-balance sheet event in Oman that prevented us from issuing our results on time, which was unfortunate, and a delay for which we apologise, but there's no financial impact of that in these numbers. Asia Pacific, a bit disappointing. We lost a couple of people during that financial year, and I had to look at working to rebuild a team of 20 based out of Singapore. We've made some good progress on that, but have a segmental loss in that section in the period. Next one. So Europe and Americas, definitely our central business. We do a lot of work all over the world from these offices, mainly in the UK. Just over 100 of those people, about 110, 120 during this period, work in the project services team. The rest are in the consulting and expert team. And we also have the largest number of experts in Europe and Americas as well, at 38. Next one. This particular region delivered a very strong performance. It managed to get an increase in revenue of 10%, including from the driver track team. The project services team, as I've mentioned, had a great year, and their headcount came back very strongly from the early phases of the pandemic, where it actually dropped off quite a lot. We've managed to increase headcount 5% in UK and Americas as well. That's been both hires in the project services team and some hires in the US, where we're looking to organically grow that business. The only part of Europe and Americas that caused us some concern in that particular time was France, where we exited the general manager for the Paris office who wasn't performing. Otherwise, a good solid performance again from our mainland Europe business. We opened up in Spain during the year. It took 2 or 3 months to get that office up and running effectively, which we did. And they are already working on South American work in the Spanish language with the USA team. Although a new start business, the USA business turned a profit in that first year of trading. So overall, a very positive performance. The nicely anticipated on the next slide, click there. The business in the Middle East is located in these areas: Kuwait, Riyadh in Saudi Arabia, Oman, Dubai, Abu Dhabi, and Doha. In reality, we focus on the Dubai and Abu Dhabi offices as a hub for the region, and we have a number of people in Doha, in Qatar, limited presence in Kuwait, and a much smaller presence than we did in Oman, which I know a number of you are interested in asking some questions about. We'll get to that a little later. Positives in the layout story here: whilst we have 6 offices, there are 3 that are regularly manned at a high level. Headcount is 65, down significantly from over 100, 110 2 years ago across these offices, and 6 experts, which is actually up 4 in the period. So the underlying strategy is something that we're still working on. Next slide. These are the numbers for the year. You can see the marked drop in revenue, which came from many projects just being frozen and clients not wanting to instruct against the pipeline of work that they have. And cash liquidity in this region makes it a constant and ongoing challenge. So we're starting to see that pipeline come through. Obviously now we're also focused, as that pipeline comes through, on making sure that we can get paid. The loss in 2021 includes 200k severance costs for the people that we exited from the business. Our presence in Saudi Arabia is important to access that growing market. That's the strongest market in this particular part of the region. And there are a couple of really significant project wins that we've had over the last few months that are starting to come into the pipeline that we particularly are keen on seeing grow. And they are coming mainly from KSA. That's the growth part of this particular region. Next one. So moving over to Asia Pacific, a few offices you can see spread from Seoul in the north down through into the offices in Australia. 7 offices, not large offices. The largest one is in Singapore. Expert headcount went down to 2 over the period of time. We've managed to get that back up to 6 with some recruitment. It was very focused in the year to rebuild this team following the exit of the previous leadership team in Singapore. The next slide. The exit of that team and the pandemic combined reduced revenues from 7.7 to 4.1 in the period. It's a loss of 0.4 there as a result of that, requiring us to restructure and rehire some new experts and build teams around them to put that business in Asia Pacific back on good footing. We had a very good performance in Australia with revenues up and a good profit stream there. There's a lot of infrastructure work in Australia that we were able to tap into, which is a very positive and useful thing for us to be doing. A number of years work there and plenty of opportunity to grow. For me, the most positive thing in APAC is establishing that presence in South Korea, where a number of the world's largest contractors are operating. People we already work for to some extent in APAC and the Middle East, but the decisions are made in Seoul for a number of those businesses. So it's important for us to have a presence there. We have an ongoing focus in rebuilding around those new experts. We've hired an efficient and effective team. Next slide. So where we currently are, we have a good pipeline of live opportunities across the business, across all regions. Final quarter of FY21 was very, very strong indeed, as some of that bottleneck of opportunity started to come through. Sustained improvement that we've seen. We also had a very good October and November. December was less strong, but December is often a difficult month in consultancy anyway. Our budget for our second half is where the weighting normally is in this business. There's some cyclical periods in it. Christmas, Easter, and one of the summer months is usually not great for us, but we tend to have a strong finish to the year, which is exactly what happened this year and indeed the year before. We are looking to see a stronger FY22, and we're very optimistic and quite confident that we can push on from where we currently are with the strategy that we've got implemented for a better result over the next 12 months. Next slide. The strategy remains the same, and we've been trying to implement it through the last 2 years, despite the challenges that have presented themselves. We've managed to get DRLIS experts up to 50 in total. That's what drives that higher margin revenue in expert work. And we've certainly refocused our Middle Eastern business. We've significantly reduced the team in Oman. We've reduced the presence in Kuwait, managed from Qatar, and in effect combining those offices. And the UAE team is not only reduced in size, but also focused now on the opportunities that we're seeing in the market, which includes some significant oil and gas work. Our focus over the next few months is to make sure that we get those key accounts with the blue chip companies up and running as effectively as we can across that region, in particular, across the Middle East in particular, leveraging through the Saudi Arabian base that we have, also leveraging through South Korea, and winning as much high quality, large expert work as we can. And we're certainly seeing a decent pipeline of it available. We'd like to establish some more technical experts across the Middle East. We'd like to grow the number of experts and staff in the US as well, all of which is something that we've been making some significant progress on, even though the last couple of years have been particularly challenging. The next slide, I think, shows a comparison in these sort of donut graphs between the 2 years of 2020 and 21. Interesting to note that the expert witness work has grown from 24 to 27%. What I would say is that statistic has to be also viewed in the context of significant drop in revenue, and the guys that exited the business from Singapore in that period also were mainly doing DRLIS work. So the growth in expert work across the business as a whole is, on a like-for-like basis, probably seeing significantly more than 20%. It's probably up to about 31 if you were to compare like-for-like in the two periods. But anyway, the strategy is to grow the expert side, and that's clearly something we've started to make some good progress in. Next one. I'm going to hand over to David now, who will take you through the financial highlights.
Thank you, Mark, and good morning, everyone. So in summary, the financials for the financial year showed a revenue drop of just over 8%, but that's the revenue increase of approximately 9–10% in the UAM region, offset by reductions in both the Middle East and APAC region. In line with that, we've maintained our gross profit margin at approximately 25%, and that's by keeping control over our cost base, particularly the direct costs, i.e. the employees. So managing our cost base to reflect the size of the revenue reductions in the different regions. In terms of admin expenses, they've more or less been flat year on year, and then that flows down to a slightly lower underlying profit before tax of 2 million versus 2.5 million from last year. One of the things to note in this is the net cash position. It did drop in the year from 8.2 the end of 2020 to 6.5, and there's a cash bridge. So next slide, please, Hannah. It's largely as a result of what are effectively one-off items. The deferred group VAT, that was something which all companies in the UK back in the beginning of the pandemic all benefited from during 2020, but then the payment was made and that fell into the 2021 year. So that was approximately 500,000. The payoff to our previous CEO, whilst the costs were all put into the previous financial year, the payment was made over a 12-month period. So part of those costs in terms of cash flow through in this year. The reduction in the Middle East pension liability, in the Middle East, the way a pension is accrued for an employee there is we put a percentage away of their salary on a monthly basis, and it's called a gratuity. When that employee leaves, they are paid that gratuity on exit. So because we reduced our headcount, particularly in Oman and UAE, there was a reduction in the level of the liability sitting in the balance sheet. The other is we have a partnership with Collier's Project Leaders. That's based in the Middle East and in Canada. At its outset in the Middle East, they couldn't have a bank account because they didn't have a trading license. So their deposits were made into our bank account. This last financial year, they managed to get their own bank account. And so over a period of time, it naturally reduced in terms of the balance that we effectively owed them, in that we had their cash sitting in our balance. It varied, but it's now down to nil effectively, because it's reduced by 0.6 during the year. The next slide, I think, please, Hannah, is just a bridge for the profit, which, as I previously mentioned, the revenues drop, offset by the increase in the UM, and that's offset by a reduction in the cost of sales, which is the headcounts in Middle East and APAC region.
Thank you for the canter through the presentation there. Obviously, a few questions here on the we call it the Oman issue. But how much were the finally published figures amended from those envisaged immediately prior to the surprise announcement, which has obviously taken a knock to confidence and the share price?
But not a single penny.
So yeah, I mean, there isn't in the financial statements. There is note 27, which is the post balance sheet events note. It explains what it was in relation to, but it's the impact on us ultimately was nil. But we had to confirm that position for our own purposes, but also obviously for the auditors.
I think one thing I would like to just say about the Oman issue, and I've had some direct emails from people as well as these type of questions, is simply to say there is no lack of transparency or desire to have any lack of transparency with us. We very openly disclose what we can, but when one sees an issue like that arise, it's a technical issue. There will clearly be legal advice that we as a business have to properly take to look after and protect the business. And we've got to observe that legal advice. And it might well mean that we are unable to say as much as we would like. And it certainly does put that those requirements upon us. But that is something that it's entirely proper for us to do in order to protect the business from potential litigation claims and challenges and the like in any event. So we have said as much as we are able to say, and the fact that the impact is not a single penny ought to hopefully perhaps bring back some confidence in anyone who may have had some understandably some concerns at the time with the timing of the results.
So I think I know the answer to the next question, but just for transparency, are we likely to see any bad debt in Oman in the current year numbers following the delay to the accounts?
Well, I don't think we are. We have a number of clients there who are mainly government entities, so we're expecting to get paid. I don't think I'm revealing any great secrets by saying it's not always easy to get paid in the Middle East. And I think a number of the people tuned in and a number of people that invest in business do understand some of those particular challenges. But we're not expecting any big downs in Oman at all.
Thank you. Right, moving on to a few other subjects then. Do you expect to see any further ERP costs going forward?
We are considering, I mean, at the moment we're doing the ERP in terms of the financials and the forecasting and time recording and invoicing and so forth. As a follow-on to that, we are looking at an HR module, which currently I can't confirm that we will go ahead because the board needs to consider it, but it's also being embedded within what we've already bought. That might mean, but Microsoft haven't actually confirmed this, but that might mean that our license cost just increases. But the revised software is part of an update, but that's an ongoing thing at the moment. But that's the only area where we are likely to incur additional ERP over and above what we've already incurred.
Okay, thank you. In the current trading and outlook section of the accounts, you highlight your frustration in sustaining an improvement in the group's financial performance. Can you elaborate on the key moving parts here?
I think for us, the key moving parts are to get the Middle East and Asia, and along with Europe and Americas, all being profitable at the same time. And I think those of you that have followed the stock for a while will see that often, I can't recall a time where we had a dreadful year everywhere. We usually have pretty okay or average or good year in one or two locations, and one other location for some geo-economical, political type reason or some other issue causes us a challenge. And this year you've got a profit of £2 billion and losses of 0.9 and 0.4 respectively in Middle East and APAC for clearly identifiable reasons. So it doesn't take a great amount of maths to work out that if those businesses could be made to break even, there would be a much more significantly profitable profit figure available. And actually, if one could turn into a profit, which our focus is on, then there could be a very significantly improved situation. And that is what management are focused on. The business is in a different place to what it was in 2 years ago. A lot of steps and changes have been made to the strategy to get us there. We've done all of that during a pandemic that has affected everyone, everywhere, and everything, and particularly Middle East, but to some extent APAC, that has been more sharply felt in terms of getting work pipeline through.
Okay, thank you. Do you see an opportunity for COVID-related delays in forthcoming disputes?
Most of the jobs that we're working on now have a COVID-related element to them. So that's already something that's well into the pipeline, something that we're quite practiced at. Those contracts that are the newer contracts that have been coming through, obviously they've been started post-pandemic, have different provisions in them. When this all started, it was arguably a particular type of unforeseen event. It's kind of arguably a force majeure event. And then the minute, of course, you start entering into new contracts post-pandemic, there's a slightly different legal and contractual scenario that sits around that, because it isn't unforeseeable if you've been doing it for 6 months, 12 months, a year, 18 months. So the context is different, but in every single dispute that we're working at, there is something COVID related in it, absolutely.
Well, we are 2 years in. Over the last 24 months or so, you have opened offices and established presences in New York, Madrid, Riyadh, and Seoul. Is there anywhere else new that is pressing?
No. All the boxes that we wanted to tick are ticked, which is quite important and useful for us overall. The Seoul in Korea and the Riyadh ones are themselves markets where we can access work, and so that's a clear strategic need for that. We are looking to grow Madrid and New York, and a lot of the bigger disputes handled through those businesses are in South America. So having that Spanish-speaking resource is a really helpful thing. But no, I'm not aware of any others. It may, this is very much a global business, and there's a lot of moving parts, and sometimes you have to tune the machine a little bit from time to time, year to year, as things change and the focus changes. So it may be that we will turn one or two things off and one or two other things on as we see demand globally changing in the future. But for now, structurally, apart from one or two bases in the US that we might get as we grow, simply through natural organic growth or adding on additional teams, other than that, this is the shape and size that the business really needs to be.
With the company forecasting higher profits for the full year 22 and decent cash balance, full year 21 working capital outflows are described as one-offs, and the share price at multi-year lows. Why are you not buying back shares?
Well, that's something that's very much on the agenda, and we will be looking at closely this week. I don't want to go into too many of our internal conversations about that in much detail, but high on the agenda.
Okay. And where do you envisage the proportion of expert work Diali's headcount rising to within the next 3 years?
I think if we can shoot for 40%, I think that would be a really admirable target to work towards. I think most of the growth in the US is, in fact, it's almost all expert work. And with a reduced overall revenue, but revenue starting to build back, what we're building back is predominantly, I would hope, going to be expert work. So we're currently, although the stats say 27, I think it's probably about 31. So I think we can shoot for 40. To get much above that, we're going to have to add in different streams, which we may well get to, but there are other priorities for now. One question I can see on the screen is, where do you envisage the proportion of expert work Diali's headcount rising to within the next 3 years? I think I'd like to see our expert headcount heading from 50 towards 60 in the context of what we currently do. And what we currently do is delay analysis of where things went wrong on projects, quantum as to how much damages should or should not be, and technical in terms of what actually went wrong. We'd like to plug into that more technical. We can grow in that area. We could grow in IT and forensic accountancy if we can find the right people to bolt onto the business. So I think we can get to 60, 65 within what we currently do, but we're going to have to add some new streams of work to that to get to the sort of 80 figure that I think is ultimately aspirational. I'm not sure we'll get to 80 within 3 years, might be 4 to 5, but effectively our 5-year strategy hasn't changed at all as a business. The effect of the pandemic is simply kind of to shift it back a year.
Well, thank you for that overview. Certainly within our note, I know we touched in some detail about the operational gearing that is in the business that could be taken advantage of in more benign conditions. So I hope the next 6 months, 6 to 12 months, see those benign conditions coming through. Thank you both for your time, and we look forward to hearing from you again in the next 6 months.
Good. Thank you all for attending.
Thank you. Thank you all.
Thanks.
Thanks. Bye-bye.